Hello, good afternoon, everyone. We are at 3:30 here on the East Coast, 12:30 on the West Coast. Thanks so much for joining us. We're just going to give it another minute or so. I still see folks are sort of still coming on, so let's just give it another minute or so and let everybody join the call. So just hold tight with us for a moment. Okay, I think we're ready to get started here. Thank you all so much for joining. My name is Dawn Verbrigghe, and I am the CEO of Jottful. Thank you for joining us at today's webinar, What Government Funds Are Still Available for You and Your Business. This topic was actually brought up to us by a member of Jottful community. So thank you so much for bringing that up, because this turns out to be the most popular webinar we're hosting so far. This webinar is part of a series that we do here at Jottful for our customers and our Jottful community members, who are all the wonderful creative professionals in our ecosystem who often collaborate with us on projects for our customers who are located all throughout the country. What we do at Jottful is we make and maintain websites for small business owners. So a lot of our customers have been really heavily impacted by the COVID-19 pandemic. Before I introduce our guest today, I'd just like to cover a couple of housekeeping topics. First of all, today's webinar is being recorded. We'll be able to share a link with you after the event is complete, and we welcome you to revisit the content yourself and share it with others afterward. We also invite your comments and questions. You'll see that there's a Q&A chat box on the right side of your screen. If you think of a question for the guest at any point, just type it in there. We do only have a half hour today, so I will be reading through those questions and finding those that, so we can share with our guests. And if there are any left over that we aren't able to get to today, we'll pass those on, and hopefully we can get those addressed as well. So I would like at this time to introduce you to Matt Wilkins. Matt Wilkins is of UHY, which is an accounting and advisory firm. And I'll let Matt introduce himself and take it over from here. Matt?
Thanks, Dawn. As Dawn mentioned, I'm a manager at UHY. We're a CPA advisory firm in the state of Michigan, and also nationally. We have 5 offices in Michigan, one here right in Ann Arbor. So we've been handling a lot of questions dealing with this with clients and in the community. So I appreciate the opportunity to talk to everybody regarding this, and hopefully we can provide some insight that you've not heard yet. And then, as Dawn mentioned, if you have questions, post them, and then I'll try to answer them at the end. If not, I'll have Dawn send them to me, and then I'll be able to answer them from there. So we're going to cover the main 3 we're going to cover right now are the Paycheck Protection Program loan, Economic Injury Disaster loan. We'll touch briefly on local and state funds and assistance that are available. And then the last few slides, the CARES Act provision, those are there for your reference. A lot of you probably have an accountant in that you work with currently. That it'd be good to just, briefly see those, touch base with them about those, and just say you heard about them. There might be some benefit there for you. But mainly I want to get into the loans, because I think that is that's of the pertinent now situation, where the CARES Act provision, some of those can be dealt with in the future. So the Paycheck Protection Program, This was initially a loan program administered through the SBA 7A program. The CARES Act initially funded this with $349 billion, and that funding has already been exhausted. You've probably seen in the news this week that there's pending legislation that actually passed yesterday. Both the House and the Senate should be signed in today. Possibly already has been signed if I haven't seen but for sure today. The Paycheck Protection loan is to businesses, nonprofits, and groups or tribal businesses with less than 500 employees. The key thing is it's also available to sole proprietors, independent contractors, and eligible self-employed workers in less than 500 employees, which from what I know, most of you are probably either in the independent contractor, self-employed worker, and definitely under the 500 employees. When I say that it's administered through the SBA, that it's administered through the SBA 7A program, but you apply for it through a financial institution, through a bank. There's a lot of, there's some banks who aren't taking applications, even if they are an SBA provider. There's a lot of banks that have a large backlog right now. So if you haven't applied for this loan, after this presentation, I definitely would get with your bank or find a bank that is accepting them. I would tell you, my advice to you would be to steer away from the bigger banks, as from a few phone calls I've had today, I've had clients who have been told that they're at the back of the line. They still have 5,000 other applications to process. So, but some of the community banks are able to process them still. This loan, yep.
So why don't I jump in here, Matt, and tell you a little bit about our experience, because I think that might be helpful for people who are thinking about applying for this. We bank with Chase, and we learned pretty early on that we were going to go to the very back of the line. And you'll find that with the big banks, they did in fact let their largest customers through first. And they have an unbelievable line. They did not start processing applications until, in some cases, just before the original fund ran out of money. So they have an enormous backlog. So trying to submit an application through a large bank at this point is probably just going to put you right to the back of an extremely long queue, which is why going to these smaller banks might be a good approach right now. And that includes some of the fintech, the financial technology companies like Cabbage, Intuit, Gusto. All of them are also now processing these applications.
Yep, definitely. And we'll touch a little bit on what the new act is, and you'll see that they've earmarked some money to go directly to these small banks so that the smaller businesses can get through. So the Paycheck Protection Program, the big thing about it, it's initially the whole point of it was to bring employees back on payroll instead of having them laid off. The loan's limited to $10 million, and it's calculated by taking 2.5 times your monthly average payroll payments. Payroll payments include your gross payroll, limited to $100,000 per employee. Your employer health insurance premiums, less reimbursements, unemployment tax, that's only your state unemployment tax. It doesn't include your federal unemployment tax. Your employer contributions to a 401k plan for your employees, and the employer costs for pension plans. If you do happen to have employees who are not U.S. residents, they're excluded from this calculation. It doesn't exclude you as a company as a whole, just from the calculation.
Matt, there's a question about whether or not credit unions are able to process these loans. They can if they work with the SBA. Is that correct?
Correct. So the big thing is it's got to be an SBA Preferred Lender. So they're on the SBA website. It lists those banks out. So that's just at sba.gov. And you'll be able to find banks that are approved lenders. So there are some credit unions. There's also banks who just don't process these types of loans. It's just a choice they make whether they want that. As we all know, a bank is a business as well, so they have to look at their balance sheet, and how much liability they want to take on and where they're making money. So, yeah, some unions are able to. It just depends if they want to, and they went through the process.
Right. And in terms of applying with multiple financial institutions, I know this was a big thing in the first round where people would try and get in line at multiple banks because you have no way of knowing how long the line is, right?
Right. Yeah.
But the key is that you cannot have more than one application actually submitted to the SBA. So you can get in line at multiple banks provided no more than one application gets put through, correct?
Correct. Yep. So you definitely want to be careful about that because you don't want to be denied because you ended up with two applications. Um, I would say from experience at this point, if you talk to your bank branch manager, they're going to be pretty straightforward. Um, I haven't run into. Um, I have more clients calling complaining about their current bank saying that they would be so far back in line versus clients, you know, saying, "Oh yeah, I got through." So it's yeah, it's definitely find out. And like Don said, the online fintech is a lot of them are trying to help processes. And I saw the Intuit one. I didn't know Gusto was, but I definitely think everybody's on board trying to help people at this point.
I know ours was processed through fintech, through Cabbage, which is Kabbage. So yeah, they are pushing them through. And to your point about speaking with the actual lender, if you're using a large bank like Chase, you will not be able to speak to the actual lender. They're very clear that they do not have the ability to actually communicate with the people who are applying. So that's only an option if you're working with your sort of smaller local banks. So that might be the way to go.
Yep. So the terms of the Paycheck Protection Program. So the loan term is a maturity over 2 years with an interest rate of 1%. So those terms alone are, definitely attractive to people to apply to. The payments are deferred for 6 months. The biggest benefit of the Paycheck Protection Program is that it can be fully forgiven if certain criteria are met. So we'll excuse that last line there about employer costs for pension plans. That should be deleted out of there. So the loan can only be used for certain costs, and this is fully defined in the SBA guidelines that they've provided the banks and borrowers. It's for payroll costs, interest on mortgages, rent, and utilities. And I'll go into a little more detail on some slides about what all of those costs include. Like I mentioned, with the new act that's getting signed in today, smaller banks have been allocated $60 billion of new funds to be loaned out. Definitely consider using them. And don't be surprised if even the smaller banks, if they say you have to be a current customer. I would also say don't be surprised that some of the smaller banks are going to require you to deposit the money into a new account at their bank. And it's not that you have to set up any automated payments or anything. It's just the money's got to go in there, and then you can draw the money out from there.
We have a question here from George who says he already submitted an application but didn't include rent or utilities. Am I able to modify? George, when they come up with the amount that you qualify for the PPP, they don't take into account rent and utilities. They just do that 2.5 times your payroll. It's just that once you get the funds, they specify what things you're allowed to spend it on, and rent and utilities are things you're allowed to spend it on. So there's no need for you to modify it.
Correct. Yep. So with the loan forgiveness, there's guidance out there, but the full regulations and guidance from the SBA, it's one of the last pieces that they're coming out with. According to the CARES Act, the guidelines have to be finalized for loan forgiveness by April 26th. So that'll be out this weekend. But from what we've seen and from what the SBA has released out there so far, your loan can be forgiven depending upon the amount of the loan used for qualifying purposes. So it can be reduced if you reduce the number of full-time employees or salaries and wages to those employees during the 8-week period. The 8-week period is one of the big sticking points right now. There's a lot of push to extend this to 10, 12, 16 weeks. A lot of companies are finding they can't even spend the full amount of their loan on payroll, even if they paid everybody the same that they were supposed to make. And the 8-week period starts when the money is funded into your bank account. So big things are that you need to accumulate and track all your expenses. Not just using a tracking sheet to track them, but you should accumulate the invoices, payroll journals, canceled checks, anything to prove the expenses that you spent that money on.
So a lot of you, if you have employees, may have already made changes to headcount or to salary. And there are some clear stipulations in here about how much you're able to have forgiven if you've made headcount or salary reductions. It's quite a formula for this, and not all rules are out yet. They won't be out till this weekend. So definitely work with your accountant on this, because obviously you want to maximize the amount that is forgiven so you don't have to pay any of that back. But at the same time, you want to make sure that your business has the stability to survive going forward, right? And you need to prioritize that over getting your loan forgiven.
Right, yeah, and that's a big thing right now. You know, the initial push was, how do we get this loan? How do we calculate it? Now the push is, how do we get it to go away and forgiven? Dawn, I lost the slides.
They're here.
Perfect, thank you. So this slide here basically explains everything that goes in the payroll cost. You'll see it's your gross salary and wages. It does include vacation, parental, family, medical, or sick leave, group healthcare benefits, retirement benefits, and state or local tax assessed on the compensation of employees. So that's your state unemployment. That's pretty much the only one in the state of Michigan. Some other states have certain taxes that are imposed on employers outside of unemployment.
Matt, a lot of these people on this call are members of Jottful community, and there are a lot of independent creatives, solo proprietorships, single member LLCs, and so forth. Do they qualify for a Paycheck Protection program?
So you do qualify. The stipulations, what they're taking into account are basically, you take your net income, and that is what they're considering wages. So say for 2019 you had, just to make the math simple, $12,000 in net income, so your gross income less all your expenses. Then they're going to divide that by 12 and then times it by 2.5. So that's what they're coming up with for your monthly income for your payroll costs. So you do apply. It's just for the most part, it's going to be a lot smaller of a calculation program they're going to come out with.
Yeah. But don't think that you can't apply just because you don't have employees. You can.
Right. You still apply, and you know, we keep hammering this home. One of the advantages of a local bank is they're going to help you calculate that more than a big bank's just going to be like, here's the application, fill it in. But yeah, you're still able to apply, and I definitely would say apply, get the money that's out there. And based on, you know, what the audience is in this, like most of you probably don't have a mortgage for the business right now, so the interest won't apply to you. You might have rent, so that is as long as the lease was in arrangement before February 15th. Also note that right now, the way it's worded, the rent can't be prepaid. So, say you got a bunch of money and you need to spend that up still, you can't just pay the whole year's rent. That's technically a misuse of the funds. Your utility payments include electricity, gas, water, transportation, telephone, and internet. This slide is pretty wordy, but basically what this is, this just came out yesterday, and what it's saying is a lot of these big companies that were publicly traded or had access to money elsewhere, they had liquidity where they could be pulling money, were approved in the first round for some of these loans. So in this second round, they're going to be forcing people to certify that they don't have any other means of money to get through this, and also that they truly were impacted, their business is impacted by COVID-19 and the state of the economy right now. So that's the high level of Paycheck Protection Program. The other one is that's out there is the Economic Injury Disaster Loan. This loan might appeal to some of you a little more. It's not a forgiven type loan, but it has benefits, in the amount that you could get from the loan could be higher than the Paycheck Protection Program.
But one point is the Paycheck Protection Program doesn't require any collateral, unlike this loan.
Correct. Yep. So no collateral on the Paycheck Protection Program. There is, if your loan starts to get over 25 grand, collateral for this economic injury disaster loan. So that is a downside of it. You'll see there's downsides to this loan. The new bill waiting to be signed into law is allocating additional $10 billion to EIDL grants, $50 billion to EIDL loans. The loans under this program limited to max of $2 million. This is applied for directly through the SBA. There's no bank involved in this. I think it's a 3-page online application. It takes usually less than an hour. When it first came out, it was taking people a lot longer. They streamlined it. That you would be assigned a SBA loan officer who would help determine what your economic injury is to determine how much the loan is. Your funds can be used. It's a working capital loan, so you're not limited to 4 categories of expenses. It's anything needed to fulfill current debt obligations or working capital to keep your business going. As Dawn mentioned, collateral is required in this loan if it's greater than $25,000. The EIDL grant that I referenced is a $10,000 up to a $10,000 grant that it says it should be received within 3 days. I can tell you that's not how it's working. And the application, if it's denied, you still get to keep the money. There's no payback. If it's accepted, still considered a grant. The 10,000 is a little deceiving. Initially came out and said it was 10,000, and then they restructured it to be $1,000 per employee. So that part kind of, people were a little miffed because they thought they were getting 10 grand. If you apply for an EIDL loan and then you end up with a PPP loan, if you're using it for payroll purposes, it gets refinanced into your PPP loan. There's no way around it. They're gonna do that. The application itself asks the question if you've received EIDL funds. If you were getting a loan over $200,000, you'd require a personal guarantee.
I can say on this that the last person I heard apply said that they'll hear back within 3 weeks. So that's the delay right now in EIDL, about 3 weeks.
Yeah, that sounds about right. I know at one point it was 45 to 60 days. So that's why they brought the banks on board for the Paycheck Protection program, was to try to get these pushed through faster. Um, the interest rate is slightly higher. It's 3.75%. Maturity cannot be longer than 30 years. They'll determine the repayment length. You're not really going to have much say in that, but it's up to 30 years. Your payments are deferred for 12 months. There's no prepayment penalties. So say you get approved for this loan, you take the money, um, and then your business picks up out of nowhere faster than you were expecting, and you just don't want this loan sitting out there, and you just want to pay it back. You can pay that back without penalty. The downside is there's no forgiveness opportunity. So outside that up to $10,000 grant, you would have to repay this loan back.
Matt, we have a question here about unemployment. If somebody is receiving unemployment from a side job, can they apply for either the EIDL or the PPP?
Yeah, I mean, it's determined by business. So just because you're receiving unemployment from a different job, if you're a business owner, your business still is going to qualify. I haven't seen anything that would tell me that you wouldn't qualify. If you were to tell me that you were on unemployment because of your business currently and got a loan through it, then I would tell you you would have to come off of payroll or off of unemployment to start paying yourself payroll. So that's some employers are running into issues right now because their employees are making more off of unemployment and they're not wanting to come back to work. That's a complete legal issue that I won't get into. If you're in that boat, have employees and they don't want to come back to work, you would definitely want to get a labor attorney to decide what your rights are with that. I touched on what the EIDL grant is. It's an advance on the loan, $1,000 per employee. Doesn't have to be paid back whether approved or denied. And that would get deposited way before your loan is approved. State and local funds assistance. So a lot of the big thing is unemployment. Unemployment for sole proprietors and independent contractors, you in the past were never able to apply for unemployment. They've opened this up so that you can apply through the state of Michigan. It's called Pandemic Unemployment Assistance. You go through the Michigan Unemployment Agency. The government is subsidizing companies or the states for this, and it would be $600 per week if you meet the terms of the Michigan unemployment.
I should just jump in here and say that people are on this call from all over the United States. We're based in Michigan. Matt's based in Michigan, and so are we at Jottful. So that's why it says Michigan. But the $600 is federal. So regardless of which state you're in, as long as you can qualify for unemployment, you can also access that $600, which is coming from the U.S. government. We have a question here about if your company has a foreign parent company, are you still eligible for these?
If your company is the one applying would have to be the one located in the U.S. You'd want to make sure that you're applying with their name, their EIN, the U.S. company. That'd be where that comes into play. If the U.S. company has foreign employees, then that would back out of the calculation.
Yeah, you're required to certify that the employees are not foreign. Great.
Yep, exactly. Yep. And so some of these slides are directly related to Michigan. The Michigan unemployment website is definitely lacking right now, but I would assume all states are having some issues. Make sure when you go to apply, you're indicating it's for the pandemic unemployment and not regular unemployment benefits. The next two slides are some Michigan funds that are out there that are trying to provide money as well to companies if you're located in Michigan. And I'll briefly just touch on two of these about the CARES Act. I know we're at the time. A big one is if you are a startup founder that maybe left a previous career and have some money in retirement, it is possible to take up to $100,000 out of your retirement fund without an early distribution penalty. It would be taxable over a 3-year period, but if you pay it back over the next 3 years, it'd be a non-taxable event. So it's a quick way to access some money that you wouldn't be able to access if it wasn't for this provision. Not that we want to pull money, everybody's stocks are, retirements are at different stages right now because of the market, but if it's going to keep you afloat, it's definitely an option available to you. Some of these are topics for if you have employees and aren't getting funded. So like I stated at the beginning, these are, take a look at these, bring them up to your current accountant CPA to see if you should be taking advantage of them. They're not items that are readily out there in the news because they're talking more so about these Paycheck Protection Program and the EIDL. The only other big one would be if you have a net operating loss from 2018 or 19, you can carry that back now where before you couldn't. So if you have that type of situation, definitely be looking into it because it's easy access to some funds. So I don't know if there's other questions.
That last slide was full of great questions to ask your accountant. Most of the people on this call.
Exactly.
Yeah. Are there any last questions? No. Well, thank you so much, Matt. This has been super, super helpful. This has been a really great conversation, and we'll follow up. We'll follow up after the call with the video for everybody after it gets finished sort of churning and whatnot. Thank you all for joining the call. Talk to you soon. Take care.
Thanks,
Bye.
Don.